Hi everyone and welcome to the weekly update with me, Rich Pro Market Analyst at Tech Markets. Each week I'll take you through the key events that I believe will be driving your investments in the coming days. Now, moving into this week, certainly volatility in the Forex markets remains high. And that volatility was driven by the FOMC meeting last week, which continues to have a legacy in this market. The FX markets have been sharply moving away from the dollar, then also a rebound for the dollar. Into Friday we had sharp selling pressure again on the dollar, and that has just continued, and even into Monday we've had some sharp moves in these markets. So it just continues to remain choppy without any real lack of direction, in my opinion. You've had a slight correction on the dollar in terms of a net basis, but nothing too significant. And it just depends on exactly where the support comes in as to exactly how far this is going to go. But at the moment, in my opinion, it doesn't look as though there's any real significant change of trend yet. But there's a lot of factors that could still play out. But at the moment, there's still some way to go. Now, the reason that this has come about is because the FOMC have removed the word patient from its statement, and that sort of now leads the market to think that every single bit of tier 1 economic data out of the States is going to potentially have a driving force in terms of how the FOMC is going to change monetary policy going forward. So any sort of strong economic data that comes out is going to be strong for the dollar. Any sort of weak economic data is going to induce selling pressure on the dollar. And this week we've got some housing data, we've got the inflation data for the States, which both of those have been a little bit weak in recent times. So any sort of show of strength coming through on those different indicators could well have a significant impact on the dollar, giving it some support and impact in the markets that way. So in terms of where the Forex markets are going, now the euro has certainly been on a bit of a bounce recently, and you can see in the chart that I've got on the slide the fact that this has driven a lot of volatility in this dollar index. The euro is around about 58% of the dollar index, so it has had a significant impact on the dollar index. Now, this dollar index has come back to 77.5. And it has the potential to just continue to just come back a little bit more. So it's interesting to see if we get that correction coming back. The 21-day moving average on the dollar index remains very supportive, and it's interesting that that equates back to euro dollar again, because the 21-day moving average has been a basis of resistance for euro dollar, and that comes in around 109.20 on euro dollar. So we've had that bounce back to to the sort of the 108, 109 area on euro dollar, and this is around about where the correction, or the bear market rallies have come in to find a bit of resistance and then fall away in previous times. So it's interesting to see if coming into this week whether this is going to be happening again. So the resistance on euro dollar is around about that 109 mark. The key overhead resistance comes in around the 110.98, which was that key January low. Moving on to cable, we've had this move on cable whereby a similar sort of volatility movement, but the finding resistance above, in the $1.50 area. So it'll be interesting to see. That is the overhead resistance, if that remains intact this week, and at the moment, certainly on Monday, it is still finding resistance around that level. Dollar yen is an interesting one as well, because it has found support around a 2-month uptrend. And also the price support around 119.40 has also been important. So whilst that support remains intact, I think the bulls have still got an outlook whereby they'd be looking to buy into the weakness. Now, I think one of the trigger Forex pairs could be the fact that you've got on Kiwi dollar, you've got a rally that's come back towards the 7600 level, and I think that could be an interesting barometer across the board pretty much, because that has been a massive pivot level on the Kiwi dollar. If it starts to trade decisively above that resistance, that could also start to drag the momentum indicators improving, and that could signal a bit of a turnaround, and you could start to see if one of these dollar Forex majors go, then you could see a bit of a chain going. Okay, so what about the equity markets. Well, we've had this rebound come on the back of the dollar weakness, and that weakness has been basically driven by the fact that, so say for example, the S&P 500, a lot of their companies in their outlook statements recently said that the strength of the dollar was going to potentially impact them going forward. Now, the weakness of the dollar has therefore subsequently meant that this has allowed the index to rally, and that rally has seen the S&P 500 up towards a challenge potentially now of the all-time high once again around 2,120. You got the support that comes in for the S&P 500 now around the 2,040 level up towards 2,065. For the FTSE 100, it's a similar sort of story, but more driven by the commodity prices, because commodities and energy plays around about 28% of the FTSE index, and that has certainly now, with the rally in oil, the rally in metals prices such as copper, have driven those sectors higher, and that has now seen FTSE burst through 7,000 for the first time ever. So the impact will be now whether it can start to form support around that 7,000 mark and actually confirm the breakout. For the DAX, it's interesting, it's sort of like a flip side of that, because the DAX has been on a correction in the last week, and that's come on the back of this strengthening euro. So the weakness of the dollar and the strengthening of the euro is the flip side of that, and that has driven the DAX lower. A bit of profit taking on the back of the fact that you've got high weighting in industrials and exporters in that, so they would be impacted by a stronger euro, and a little bit of correction in that DAX, but it still remains in an uptrend. But I think that it could be just a near-term impact on that DAX. So in gold, we've had this a fairly strong run actually. Last 3 days we've had a pretty positive move on the gold price, and it now leads to questions: is this now going to be the turning of the corner for gold? It's broken out through the top of the downtrend channel, and it's now coming up towards a test of the 11,900 and of the $1,191 mark, and I think that is now going to be the key level, because if you look at gold across maybe the course of the past year, we've had some big fluctuations. We've had a big sell-off, big rally in January and into February, and then subsequently a big sell-off again. Now we sort of could be beginning to turn the corner again into another rally. So big choppy moves in gold, and it'll be interesting to see if that can sustain the move. So what about for the rest of the week in terms of the economic calendar? Well, there is quite a lot of data, but what we're focusing on early on is the on Monday, the housing data of the States, the existing home sales. That has been at a 9-month low now, and the existing home sales need to start to form support, and that could start to give the dollar some support as well if it starts to turn up. Now on Tuesday, that leads us on to the inflation data for UK and the US, which certainly obviously could have a big impact on cable, but again, as with the home sales, you're looking to find a little bit of a bottom in inflation. If that starts to pick up, then that could lead to suggestions that the Fed might start to think about rate hikes. And then on to Wednesday, we've got the US durable goods. Again, that looks at the consumer sector in the States and the purchase of white goods, and for example. So that is again an indicator of how well the economy is moving, because retail sales have not been that great, and durable goods, although it's a very volatile number, has an impact on obviously retail sales. And then on to Thursday, we've got the and then on to Friday, we've got the US Q4 GDP, the final data of that. So a lot of US-centric data this week, and it'll be interesting to see if that starts to give this dollar some support, which is obviously the key theme through this week, how the dollar performs, because this has been the driver of markets in recent weeks and months. Anyway, I wish you good luck in your trading throughout this week, and I will speak to you again next week. Thank you.